Hello, and welcome to this very timely discussion as Saint Lucia prepares for what experts predict will be quite an active hurricane season. This as the island continues to battle COVID-19. Today we explore the disaster risk financing strategy for Saint Lucia. I'm your moderator, Glenn Simon, communications specialist with the National Competitiveness and Productivity Council. The year 2020 will go down as one, if not the most catastrophic years in the history of the world, primarily due to the impact of the novel coronavirus or COVID-19 pandemic. This health crisis has crippled economies and destroyed families across the globe, with virtually no country being spared. However, for the Caribbean region, June 1st signals the looming threat of tropical cyclones and the commencement of the Atlantic hurricane season. The National Oceanic and Atmospheric Administration, I think it's called NOAA, is forecasting a likely range of 13 to 90 named storms with winds of 39 miles per hour or higher, of which 6 to 10 could become hurricanes with winds of 74 miles per hour or higher, including 3 to 6 major hurricanes, category 3, 4, or 5, with winds of 111 miles per hour or higher. The Saint Lucia Disaster Risk Financing Strategy is one of the measures that is being implemented to strengthen the country's economic and fiscal resilience and its capacity to respond to disaster risk. The Saint Lucia Disaster Risk Financing Strategy was developed through the collaboration of the World Bank and the Global Facility for Disaster Reduction and Recovery. It consists of 4 strategic priorities, which the government intends to fully implement by 2021. The financial and social impact of natural disasters, including flooding and earthquakes, is a major concern for all Caribbean governments. But how can government reduce its exposure? What financial strategies or policies should government employ in planning for this annual threat or risk? Our panel will clarify the importance of planning for disaster, risk mitigation, risk financing, and how Saint Lucia has positioned itself for this hurricane season with this hurricane season. With us today on our panel, not only do we have persons in studio, but we have our virtual participant. So we have Mr. Matthew Brandford. Mr. Brandford just nods. He said he didn't know who you are. He's the Deputy Director of Financial Administration, Department of Finance. Mr. Isaac Anthony. He's the CEO of CRIF, and I'll let him tell you what CRIF is. So it's an acronym that is very important that everybody should know. It become a household name pretty soon. We have Mr. Tommy Descartes, and he's the Chief Economist in the Department of Economic Development. And with us virtually, we have Ms. Mary Boye, and she's the Disaster Risk Specialist with the World Bank Group. Mary, I hope you're hearing us clearly.
I can hear you. Thanks, Glenn.
Very good. So let us start off. Mr. Brandford, can you clarify what is meant by disaster risk, the disaster risk financing strategy? And does Saint Lucia already have one?
Okay, thank you very much, Mr. Simon. So Saint Lucia has been battling disasters for a very long time. And we look back from 1980 with Hurricane Allen, which cost about 305% in GDP. Then we had in 1994, we had Tropical Storm Debbie, which cost about 43% of GDP. 2007, Hurricane Dean, 7%. 2010, Hurricane Thomas, with about 43% of GDP. The Christmas Eve trough in 2014, about 20% of GDP. We also had the recent Hurricane Maria in 2017. Didn't impact Saint Lucia that much, but we got some impact from it as well. And the current disaster, COVID-19, which GDP estimates impact has not been fully calculated as yet. So we have been experiencing disaster. So from all of those events came very important steps that the government had to take, including the Ministry of Finance, which is the approval of a disaster risk financing strategy for the country. And basically that strategy helps to implement measures to reduce the economic and fiscal impact caused by disasters on very cost-effective measures. Also developing instruments for the retention and transfer of risk mechanism, and so on. So this also started also in 2007, where Cabinet had also approved what is called Saint Lucia Risk Management Benchmarking Tool and Assessment. So that tool assesses our readiness for disasters and where we are in terms of disasters. So the main objective of our disaster risk financing strategy would be to assess, reduce, and manage fiscal risks due to disasters. And so I will just go through certain areas of that strategy very quickly. So the strategic priorities for the government, Department of Finance, is to build resilience for today and to secure our future by measurably and strategically reducing the fiscal disaster risk. And so we want to maintain a sound fiscal position, because without having a good fiscal position, the impact of disasters on your resources are even doubled, and so on. So develop cost-effective and accessible financing mechanism for immediate liquidity. And liquidity becomes important every time there is a disaster, because the requirement for financing for relief, recovery, and reconstruction activities, this becomes very, very important.
That you have immediate sources of income that you could get, and I guess that's where we're going to get into how and what strategies have been put in place for this.
So also part of that strategic priorities is to reduce the impact of natural disasters on the Saint Lucia people and businesses as well, because a disaster would affect every single living organism on the planet. And our strategic priorities in the area of focus is to strengthen our data collection and management. To make decisions for disaster preparedness and disaster risk financing, you would need data. So your decision becomes now evidence-based decision on prioritization of key areas and post-disaster expenditure. Also, an important part is in the policy or in the strategy is to strengthen public financial management. There is that duty first to manage the public finance resources of the country in a very prudent and international best practices for disaster risk management. Because you will have donors who will be, where you will be drawing down money from grants and so on. So your PFM system must be able to provide the level of accountability, transparency, and the auditing aspect that goes into receiving aid for those resources. Also, improving our fiscal protection and timely access to financing post-disaster emergency response is another strategic priority in the disaster plan. So that would involve risk retention, risk transfer mechanism that will be implemented and is currently being implemented to manage, mitigate, and to help in terms of disaster preparedness. And also very importantly is to increase collaboration with the private sector, because the private sector does have a very important role to play in disaster management and so on.
And specifically there, the lean more is on the stakeholder, the insurance companies and entities that provide that sort of level of coverage?
Yes, because you do have the insurance companies who will provide the coverage for the local market and so on, and for protection of persons, businesses, property, and other liability insurance and so on, both post and before a disaster.
Mr. Brandford, that sounds like a lot of work. Now, I know in preparing it, there was technical assistance provided, and I will go to our lone lady on the panel, because the World Bank has been very instrumental as a partner. So, Mary, I want to go to you and to ask, why is the World Bank involved in disaster risk financing?
Sure. Thanks, Glenn. I'm very happy to be here today, and thanks for inviting me. Why is the World Bank involved in disaster risk financing? So, in the late 90s and early 2000s, there was a global realization that protecting your country and protecting individuals from the physical impacts of disasters was just not enough. There are other pillars of comprehensive disaster risk management that countries need to focus on. because disasters can often lead to economic shocks, which can reverse hard-won development goals. If money needs to be diverted away from development projects, if individuals can't cope with livelihood impacts, if businesses can't stay afloat. So just as not every natural hazard has to become a disaster, not every disaster has to become an economic shock. So the World Bank is uniquely positioned in this role because it has experts in disaster risk management, physical risk reduction, in addition to financial sector specialists. And together, these types of people can do things like design innovative financial protection instruments, like CRIF, for example, or like the Catastrophe Deferred Drawdown option, or even COAST, a fisheries protection product that Saint Lucia has recently signed on to. So in addition to that, they can leverage the wealth of knowledge that we have in disaster risk financing analytics to help countries make those risk-informed and data-driven decisions. And finally, we can advise countries on how to strategically use these financial protection instruments and design supportive policies around them, like Saint Lucia's disaster risk financing strategy. The World Bank also has the global convening power to bring together entities around the world, other financial institutions, and governments to access best practices and best advice, and also to access financial markets at minimal costs.
So how would you rate Saint Lucia's disaster risk financing plan? I know that you've been working with Saint Lucia for a while.
Saint Lucia is one of the, actually Saint Lucia is the first country in the Caribbean to have its national strategy approved by cabinet. So Saint Lucia is leading the region in these innovative kind of solutions and practices, and I look forward to seeing where it can go in implementing the strategy.
Excellent. Now, Mary mentioned strategies and an entity called CRIF, and with us is the CEO of CRIF. So first, tell us what is CRIF and how does CRIF work to assist the region, particularly countries like Saint Lucia?
Yeah, thank you very much for inviting me on this panel, and let me also take this opportunity to congratulate the government of Saint Lucia for launching its disaster risk financing strategy. I think it's always good to give a little bit of history to really understand, what CRIF is all about. And I think it really started off with one major hurricane event in the year 2004, which you recall, called Hurricane Ivan, which actually devastated a number of countries in the region, but more notably Grenada and the Cayman Islands, causing losses of over 200% in both countries. But that particular hurricane event was so impactful in the region that the total losses were put at about $6 to $8 billion, and we're talking about US dollars here. And so that was really a wake-up call for the governments of the Caribbean, to the point where they called on the World Bank for assistance in designing and implementing some form of disaster risk financing facility. Now, let me be very clear that the heads of government, when they met, didn't necessarily say we want an insurance facility, but they were already thinking very broadly in the context of disaster risk financing. So when the World Bank, with the support of the donor community and other very important stakeholders, eventually set up CRIF, what then was known as the Caribbean Catastrophe Risk Insurance Facility, they decided that as a first step to come up with some sort of risk transfer mechanism. And the whole idea is that it would be a risk pooling facility which seeks to pool the risk across the Caribbean into a single diversified portfolio for the region, but providing quick liquidity to the governments. And you would have heard what Mr. Brandford said, one critical element of the strategy is ensuring that the resources are quickly available to the governments of the region. So CRIF was actually set up for that purpose. And when CRIF was started, we started off by providing insurance coverage based on something called parametric insurance for earthquake, tropical cyclone, and a bit later, I think in 2014, 2015, for excess rainfall. And I'm also pleased to say that last year, we launched a new product called Coast, designed specifically for the fisher folk. And I'm pleased to say that Saint Lucia, again, is leading the pack along with Grenada, because they were actually the part of a pilot that started, as I said, last year. So essentially, as I said, it's an insurance facility that was set up by the World Bank, with the support of the World Bank, for the governments of the region, to provide that quick liquidity for the governments in the event there is a disaster. And I should also point out as well that when it was set up, we started off with 16 Caribbean governments. That pool has now been extended to 22 countries in all, because what we have done, in addition to increasing the number of Caribbean countries to 19, we now have Central America as part of the facility. We have 3 Central American countries, a total of 22. So essentially, that's what the CRIF is about in a nutshell.
How quick is the payout? since this is
consistently, we have paid within 14 days. And it's important because, and I guess a bit later on we'll talk about maybe the difference between that type of insurance and so on, but the whole idea, and that is the reason why we use parametric insurance.
Well, I actually want you to explain, because many of our viewers may not understand what parametric insurance is, and how does it differ from indemnity insurance, and how it works. So probably you could, at this point, explain.
Yeah, and it's very important to understand the concept, but I usually start by just explaining indemnity insurance that I think most people are familiar with. Because as you know, with indemnity insurance, the losses are assessed after an event. And because of the very detailed process involved, it typically takes a long time. It can take 6 months, it can even take a year or even more. And the net result of this is that it takes a very long time for any payment or payout to be made. In the case of CRIF, because of the emphasis on the need to provide that quick liquidity to the government within 14 days, it was necessary to use what is called a parametric model, which is really based on the use of parameters or triggers, if you want. Essentially, what happens is that in the case, for each natural hazard, we use what is called a trigger that takes into consideration the intensity of the event. So for example, in the case of earthquake, it's the level of ground movement or shaking. In the case of tropical cyclone, we take into account wind on storm surge. In the case of rainfall, it's the amount of rainfall and so on. So these measurements that we're able to determine almost immediately, and because of that, we are then in a position to make a very quick assessment of what the model loss is. And once we know what the model loss, once it exceeds what is referred to as the attachment point or the deductible, which you would be familiar with, it means that the policy payment is actually triggered on that particular policy. So the fundamental difference is that one, in the case of indemnity insurance, assessments are made after the event, which takes a very long time. In the case of parametric insurance, it's based on what is called a pre-agreed model. It's a very sophisticated mathematical model. So once an event occurs, you're able to make that determination almost immediately as to what the model loss is. And because of that, it allows you to be able to make very quick payments.
14 days. Matthew, are you impressed with that? Has Saint Lucia been happy with CRIF?
Yeah, we are quite happy with CRIF, and this type of quick payout is very important, because after a disaster, you find that the government's revenue generating capacity is impacted. And so there is always need to have that quick injection into the government consolidated fund, so they can start the relief work can be started immediately, and so on. So a policy, parametric insurance being offered by CRIF provides just the right disaster risk financing tool that our government needs, Saint Lucia needs, to be able to take on disaster and so on. And
I know we do have some news of Saint Lucia actually increasing its coverage. Can you explain a little bit about that?
Okay. What we have done is actually we currently experiencing a disaster with COVID-19. And so we also enter in another type of disaster, which is the hurricane season, what we expect. So what we have done, we've tried to limit our transfer our losses as much as possible, because the COVID-19 is already affecting the fiscal position of the government. So having that excess insurance, well, not excess insurance coverage, but having that additional protection will definitely assist us to be able to have alleviate the fiscal pressure and so on finances at this time.
Okay. Tommy, Matthew spoke about resilience, and I know infrastructure is up your alley. How prepared is Saint Lucia's infrastructure in case we get hit with some category 4 or 5 storm? Do you think there is a lot of work to be done?
Thank you very much, Glenn, for having me on this panel discussion here today. To answer your question, first, I think we need to look back at past disasters and see how we have, as a country, fared. And I think Mr. Brandford would have mentioned a number of the storms that we've had experienced over the last couple of years. And for instance, Hurricane Thomas, which probably is the one that is most fresh in our minds, would have impacted significantly on the stock of capital in Saint Lucia. We would have seen destruction in terms of roads, some of our public and essential services, our health facilities, our schools, and that would have the total cost would have been about 43% of GDP, and that's sizable, given a small island developing state. So I think since then, there's been a greater thrust towards building resilience into our planning, our national development planning framework. And I won't say that we are where we ought to be, but we've seen a significant attention being paid to building resilience and resilience building. So for instance, a lot of the multilateral development banks and the IFIs, they are now insisting that in order to draw down on their loans, you need to ensure that there is resilience built into whatever infrastructure that you're doing. So generally, Glenn, I think that we are seeing a greater thrust towards resilience building, but I don't think that we are there as yet. I would want to also highlight that Saint Lucia would have, there's a current program, the Disaster Vulnerability Reduction Program, which is a program that it's within the Department of Economic Development. And the sole focus of this is to, one, build resilience into a number of our infrastructure, and particularly those that we would have lost during Hurricane Thomas and the others. There's also the focus around data and evidence-based planning that Mr. Brandford would have alluded to, in terms of strengthening your Met Office and your physical planning
and even knowing where to build. I think
yes.
NIP, there's a NIS mode that they're using to actually more planning according to what exactly the information is.
Yes. And so that so there are a number of activities that the government is embarking upon now. Like you indicated, the NIP has a database of all public infrastructure, which is a very important tool, because then you would know where your public assets are, and you could then model the impact of a storm surge or particular wind speeds, and as the NIP will then be doing an evaluation of these assets. So currently we don't have valuation of all our public assets, and that is very critical if you are now going to engage in insurance and in terms of your replacement cost. So the pieces are coming together, Glenn, but I will say that we are a lot more resilient, than perhaps 10 years ago, but there's still a huge gap at a national level. And so for us, we are ensuring that in our public sector investment program, that we are now, with the assistance of the World Bank, we are now ensuring that we are screening all public projects that are submitted to the ministry for consideration into the capital, and to make sure that these projects have an element of disaster, disaster mitigation in them. Yeah.
You wanted to add to it, Sam?
Well, I think he did.
He said most of it. But Mary, I want to bring you in, because the fact that the World Bank is providing such a heavy bit of technical assistance, what are the technical recommendations made by the World Bank, particularly to Saint Lucia, to reducing the country's exposure to disaster, both post-disaster and before? What are the recommendations that have been made or are made to Saint Lucia currently?
Sure, thanks, Glenn. I would echo what has been said by the panelists so far, that what's most important is to have in place ex-ante plans that you can sit down and really consider during blue sky times. Plans in place
Now,
to
Mary, you know
reduce
you have
the
to
risk to your
explain ex ante.
assets. I'm sorry?
You have to explain ex ante. You just introduced the word ex ante, so explain ex ante, please.
Ex ante would mean decisions made before the disaster strikes.
Yeah.
So, for example, purchasing CRIF insurance coverage is a great example of an ex ante decision.
Yeah.
And putting together this national strategy for disaster risk financing is a key ex ante measure the country has put in place to help strategically respond to natural disasters and health-related pandemics, because many principles can also be applied across the board. Now, once a disaster strikes, the most important thing is to have plans in place that allow you to act quickly and address those immediate emergency needs. So when assessing the loss and damage quickly and then mobilizing response. I'm not a health expert, but of course, ensuring that access to critical utilities like health, sanitation, water, electricity is crucial to mitigating any secondary disasters like waterborne illnesses, and will allow you to mitigate future risks of potential COVID-19 outbreaks, for example, this hurricane season. And so these plans are most effective when countries work together across multiple sectors, including, of course, disaster management agencies, line ministries who are in charge of the physical works like clearing roads, and then ministries of finance who are in charge of the checkbook. And but none of this can happen if these plans are not tied to that checkbook. If the Ministry of Finance does not also put in place to finance these responses, because nothing can happen if there's not money for gas in the trucks, money for overtime for employees who are doing these critical emergency response needs, and perhaps to disperse to families who need it most to protect their livelihoods. So most of disaster risk financing focuses on the immediate financial costs needed for the weeks and months after disaster, to include multiple instruments that can be accessed, like contingency reserves, CRIF payouts, contingent lines of credit. But plans also need to have in place ways to track those post-disaster expenditures and ensure that that information is used for future planning for disasters and quantifying those contingent liabilities. And also ensuring that damage and losses are cataloged and also used to plan for future disaster responses. There's many instruments and policies that deal with these emergency phases, but there's also plans and strategies in place for financing reconstruction costs, and those would come a bit further down the line.
Okay, Matthew, this brings me to something I wanted to ask you concerning the responsibility of government. I understood within the strategic priorities for the Department of Finance in managing financial disaster is that government has a legal mandate and responsibility to prepare financially for natural disasters. Can you explain that?
Yes, so our constitution mentioned what is called a contingency fund, which is allocations being made from the consolidated fund in preparation for emergency situations. So the Constitution takes the lead on that, as well as from the Finance Administration Act also mentioned the contingency fund. So the government has been, through its budgetary process, would be making allocations from the government funds to a contingency fund or a disaster management fund. And those funds would be utilized with the approval of Parliament and so on when there is a disaster and so on happen in the country.
So is this where NEMO accesses its money when a disaster has been declared?
Yeah, so NEMO would also be featured not from the contingency fund from the onset, but they would be receiving support, administrative support financially from the government. The contingency fund would be tapped in when there is major disasters and so on, that it would be utilized. NEMO would be receiving upfront some funds to be able to prepare for the disaster and so on. So all the entities involved in the disaster mitigation and disaster post-disaster would be receiving direct assistance from the government of Saint Lucia.
Before I go to Mr. Isaac, there's a question I want to ask him about CRIF. COVID-19 wreaking havoc around the world. Is there a need to redefine what a disaster is? Because I know we're speaking mainly in terms of natural disaster, but now COVID-19 has made us realize we have to probably reclassify it. Does the plan take into account pandemics such as COVID-19 that's crippling economies and also is destroying lives?
Yeah, so the Constitution takes into account the expansion of the definition of a disaster, but through the COVID-19 experience, because Saint Lucia and most other islands have never experienced that type of disaster. Our destruction normally used to be more physical. Tropical cyclone, hurricane, excess rainfall. We have experienced earthquake, but we have never seen disaster of that nature where you have a pandemic and so on. So during that period, we've been undergoing various reform in terms of our Public Finance Act, into our new PFM legislation. So the experience of COVID has given us an opportunity to relook our definition of disaster and expand it to include situations like what we're experiencing now and so on. So we have the opportunity right now, because we have a bill that's being reviewed, so we can incorporate all of those lessons learned from the COVID-19 situation.
Okay, so there'll be some changes and amendments we can expect.
Yeah.
So in line with what you said, and knowing how CRIF, with its quick payouts, have assisted Caribbean countries, Mr. Isaac, how does CRIF insurance facility impact social safety nets for those persons who are highly vulnerable? And by extension, how does CRIF insurance contribute to the attainment of sustainable development goals for countries within the region?
Right. I mean, first of all, the payouts that we make are really, well, CRIF was first of all set up for the governments. So the governments are really the clients. So there is a contract between CRIF and the governments. So whenever payout is made, that payout is made to the governments. And the good thing about it is that the government has the flexibility to deploy or to use the resources however they think appropriate, because the government would know what the priorities are after a hurricane or an earthquake and so on. And so the government has actually, and we've seen a number of cases where a lot of those resources have been channeled for the benefit of persons who are considered to be vulnerable, who are considered to be poor, and so on. I mean, look, in the case of Hurricane Matthew, not Matthew, but as in the year 2016, the government of Saint Lucia got a payout of about, I think in EC dollars, $10 million. And they actually used most of it to the agricultural sector. Most of it actually went to the farmers and so on, because that is a group that is typically very vulnerable to the vagaries of the weather and so on. So that was one case. We saw in Haiti, when Haiti got a big payout of $20.4 million, plus an additional $4 million for rainfall. Again, because of Matthew, those payments actually went to providing support for the poor and the vulnerable in terms of medicines, in terms of food, water, temporary homes, and so on. So there is already that element. But then some of the newer products that we've been involved in are really targeting the poor and the vulnerable. So for example, I've already mentioned Coast, which is really a product that was designed for the fishery sector, but more specifically the people involved in the fishery sector.
Tell us a little bit about Coast and how it might work as well, because so that persons who are listening who may not be aware of what is entailed under it would know somewhat. Just a brief of what it is. So Coast really is, as I said, it's a product that was really designed for the fisher folk. So the government is the policy holder, but the beneficiaries are the people involved in the fishery sector. But they all have to be registered in order to benefit. So if there is a payout, that payout goes to them. Now,
essentially, one can benefit, for example, if there is, let's say, just bad weather and the fisherman is unable to go out to sea. I mean, his livelihood is immediately impacted. Agreed?
When you say bad weather, that's why we're going to redefine what a disaster is, because they couldn't go out during COVID.
Well, there you are. But that's a very good point.
Yes.
You know, but because the emphasis has been on natural hazard risk, you know. But just to make the point that, again, you have the case of bad weather, but then you have cases, of course, where there are direct losses to the fishery sector in terms of the boats, the fishing gears, and even just fishing ports and so on. All of that would potentially impact them. So once you have those sort of situations, and the intensity of the event justify a payout, that then payout is paid to the government, which then goes for the benefit of the fisher folk. So again, that for me is another example where you have insurance really responding to the needs of the relatively poor and the vulnerable.
So cost is separate to what the government will get for infrastructural damage that happens, separate just for the fish. And so you do an assessment ahead, or since they'll be registered, do you have to know how much damage before the payout happens on the coast?
Well, again, the model is very similar actually to the model that CRIF uses. As a matter of fact, the coast model, it really comes out of the existing CRIF models for tropical cyclone and rainfall. All right, but it is just that it is designed specifically, as I said, for the people in the fishery sector.
Okay. A number of things have been mentioned in terms of vulnerable persons, in terms of being able to access monies, but it brings us to building codes and where people build, how they build. And so, Tommy, I really want to address this to you. The main purpose of building codes is to protect health, safety, and structures. Do we have building codes in Saint Lucia? Are they enforced? Would you agree that enforcement of building codes is aligned to national resilience in times of natural disaster?
Glenn, but wonderful question. Before I answer that question, I would really want to speak a bit on the social protection that Mr. Isaac Anthony would have spoken to. In my previous life, I would have worked at the Department of Equity, which is responsible for social protection. And so I see myself now as an economist with a social conscience. And so Saint Lucia currently is now looking at adaptive social protection. And that's a critical reform to the social protection as we know. So the government gives transfers to individuals, poor and indigent. And I would want to highlight the fact that in Saint Lucia, we have about 25% of our population is deemed poor. And in the event of a hurricane, these are the persons who are most impacted. I had an experience while I was at the department, and I was interviewing an individual, and then I asked her, well, why she's coming for public assistance, and she said, because a hurricane that had impacted her 4 years ago, as you know, she has lost virtually everything. And it really dawned on me that there are persons who their livelihoods are really being impacted by natural disasters and hurricanes and so on. And so the first now in terms of the government is pushing forward the Human Capital Resilience Project, where we are going to now focus on making our social protection systems very, very responsive. So in a case, for instance, you would give a cash transfer on perhaps the 20th of a month, and you know that the hurricane is due to hit on the 15th. You would want to trigger the cash transfer a lot quicker so that this household can now perhaps prepare themselves to get the resources and so on to prepare for the hurricanes and so on. So I think that's a very, very important aspect that I think that Saint Lucia is pushing, adaptive social protection. On the point on building codes, I think codes are very, very important in terms of infrastructure, and in particular in the context of small island developing states like Saint Lucia that is very exposed to natural disasters. Unfortunately, Saint Lucia does not have a nationally approved building code that is enshrined in legislation. But however, we have a code that, the OECS model building code, that the building community generally follows, and there are other codes, for instance, the Miami codes and so on.
But they're not forced or obligated to, or is it that they must follow?
Well, there's not a legislation per se. So they don't. There's not a sort of enforcement, but we understand the critical need to upgrade the building codes, and so the engineers in the designing and so on are now adopting codes from other jurisdictions, and the OEC has seen the need of improving the codes, have presented a model code that countries now can draw on, and that has been what we have to a large extent been utilizing in Saint Lucia. In terms of enforcement, I think enforcement is certainly a good mechanism by which we can build resilience and adaptation. However, the ideal would be that you would want to have legislation in place first and foremost, and then you can now enforce the codes in Saint Lucia.
Because it means that if we do not have codes, CRIF will constantly be paying out more and more monies. We will constantly be looking for increased revenue to take care of the same thing that we're hoping to do in terms of trying to mitigate against risk. Because if people continue putting houses in locations that should not have houses, there's inadequate drainage. Aren't we doing... So the disaster risk plan then should really have this sort of enforcement arm of it to ensure that we build with more resilience.
I mentioned previously that the disaster plan has an element called data, information, collection of data.
That we could act upon.
So that we could act upon. So what you have is that if persons do not observe the building codes criteria, you will have greater impact when there is a disaster. And you will have greater pool of persons needing relief because of the destruction to their property and their livelihood. So having an effective code would be very important. And also, Mr. Tommy mentioned about the number of infrastructural buildings and so on that's happening, and it going through various assessments. So government has also taken the step into ensuring that their buildings, their new structures are going to be resilient, as well as climate change considerations taken into those factors. So whereas we used to construct a building that can only withstand category 2 or category 1 hurricane, you probably can construct a building that can withstand category 4 wind speed, earthquake of a
because that's what Dominica is saying that it's doing now. Yeah. Does that mean only concrete roofs, or does it, because I think it's very important.
So it means a number of things. It means that taking those steps will increase your resilience to those disasters, and there will be less pressure on the fiscal position of government to provide relief and assistance in terms of disaster, and our recovery efforts would be much quicker because there is less repairs and replacement of persons from one location to the next because of a disaster and so on. And if you notice, around the island there have been a number of new bridges that will build much taller now, so they have more height, so they can accommodate the silting of the rivers, can accommodate more volumes of water as well. And so structures have done some changes, persons are put on retaining walls and so on, so you have less land slippage and so on. So all of these disaster mitigation measures are important to mitigate your risks during a disaster and so on.
How does government incentivize persons to help protect themselves? Is it only private insurance that they have to turn to? Because if I have a retaining wall and it's going to endanger a road or a neighbor, and I say, let me put up that wall, is there an incentive to me so that I would build my resilience and also that of everybody else? Because if my land collapses, then it blocks the road. Are there any incentives? I know that at one point I heard that if you build the wall, then you could get some sort of relief.
Yeah, well it's always good that you, because risk is everybody's business. It's not just only government business. So individuals, private persons has a role to play in managing the risk. Government may have various programs, probably access various grants, so persons can now get soft loans because I think Saint Lucia Development Bank was offering certain financing so persons can build resilience and retaining walls and so on in case of a disaster. So there are many mechanisms that government use to assist persons, but everybody need to take risks as something personal to them as well, and to do whatever they can to mitigate risk, because risk does not involve anything favorable to you. It is something that's negative when it happens.
Okay, so we will take our first break. When we come back, I really want to go to CRIF to see how it is CRIF could really assist smaller persons even more. And so Mr. Anthony will indicate that. So we will be back in a moment. We're speaking about the Saint Lucia's disaster risk financing strategy. Back in a moment.
Sanitizer, better yet use soap and water.
We must protect each other if we are to beat this corona.
Together let us win this war. Be a soldier for Saint Lucia. Together let us win this war. Be a soldier, together we can beat this corona.
So you don't become the next case. Avoid touching your face. I'm sure you've been told so. Handshakes and hugging a rock, no, no.
Advice is you to please. Cover your mouth and your nose if you cough or sneeze.
Practice social distancing and avoid large social gatherings.
Together let us win this war. Be a soldier for Saint Lucia. Together let us win this war. Saint Lucia, be a soldier. Together we can beat this corona.
For further information, please contact the hotline at 311 or the Bureau of Health Education at 468-5349.
Hello and welcome back. We're speaking about Saint Lucia's disaster risk financing strategy. And when we left, we were going to go back to Mr. Isaac, who's we're talking about vulnerable persons, vulnerable communities. And does CRIF have anything in place that if that could help reduce the cost of insurance for private persons if it is that you wish to have an insurance package? Because one of the things that is preventing persons, as we've been told, is that insurance is expensive. Can CRIF ever get there to assist, or you're going to stay with just the broader picture of assisting governments? As you said, you have some new packages that are being developed.
No, it's a good question, and it's a matter that comes up from time to time, because I think there's always a perception that insurance is expensive. In fact,
is it a perception?
Well, it could be in some respects, but somebody once described it as a necessary evil.
Evil, yes.
Because I guess nobody really wants to put money into insurance, but it is necessary, because at the end of the day, what you're really buying is protection. Now, you focus on the relatively vulnerable in the society, and that's an area that we gradually paying a lot more attention. And let me also clarify that because CRIF was set up in a sense as a not-for-profit company, because CRIF was not set up to enrich shareholders and so on. We operate as if we were a not-for-profit. So what that really means is that all the residual profits is really plowed back into the CRIF for the benefit of members. So that enables us, first of all, in addition to the fact that we are pooling the risk right across the region, it helps us to be able to sell insurance at a much cheaper rate. So if a particular country had to try to buy the same insurance in the commercial markets, you know, they would be prepared to pay a lot more, maybe 50% more. So that is one of the significance. So already, from that perspective, CRIF is already cheaper.
So it means that by what you're saying, if I deduce it right, if nothing happens for an entire year, my premium will be lower the following year?
Yeah, potentially, it can happen. But of course, there are many other factors, because you could have that, but you could also have a scenario where reinsurance prices may go up, because one of the things that we do is that we transfer a significant amount of our risk to the reinsurance market, and which is actually our biggest cost element.
Yeah.
So once we could manage that to a large extent, I think that would enable us to be able to make insurance available to persons more affordably. But specifically on the individual side, our first attempt was based on a collaboration with an initiative based in Germany called the Munich Climate Insurance Initiative. And the whole idea was to design a particular product specifically for individual called a livelihood protection policy. In fact, again, Saint Lucia did launch that initiative, the very first country, in 2013. And in fact, I do recall that very same year, because I think it was of the Christmas rains. I think Christmas rains was that year, right? In December of 2013. That's right. Persons actually got payouts.
Individuals?
Individuals. So you had some of the farmers actually purchased it, and individuals. It applies not just to farmers, but even tourism workers can actually, any individual whose livelihood, right, is at risk from, let's say, some sort of natural hazard risk. And so this particular initiative has had its own challenges, I must admit. We've been working not just in Lucia, but in Grenada, in Jamaica, and more recently in Belize as well as Trinidad. But right now, the project is now being restructured, and to the extent that CRIF will now assume a leadership role within the region in terms of managing that project. So we think that in the next couple of years, that we will be able to offer a package that individuals will find sufficiently attractive to help them manage their risk. So and that would complement very nicely some of what we are doing in terms of course. I've already mentioned course, which is designed specifically for the fisher folk.
But would that take into account private households? Like if I want to...
Interestingly, you
because
raised
I'm trying to think whether the insurance entities would not see you as a threat.
Well, it's interesting you raised that because you know, we actually had a meeting with the government of the Bahamas last year following Dorian. We met with the Prime Minister of that country, and he actually said to us, could you help us, could you design a product specifically for the housing sector? Because he was concerned that this was actually one of the biggest risk areas. But he also made the point, interestingly, that it is a product that would help them in terms of replacing windows and doors and roofs. These are the areas that are particularly vulnerable when you have a category 4 or 5 hurricane. You know, so to answer your question, we have actually started a process for a feasibility study into that particular product. And if it actually turns out to be successful, I would imagine we would do it. But you also raised a very good point about, you know, how is CRIF being viewed by the private insurance companies, by the private sector. We try not to dabble or to get involved in the areas that are well served by the private sector. It is those areas that are not protected and it's not provided. Take for example, we have actually developed a product for the electric utility sectors to respond specifically to the transmission and distribution risk. Transmission and distribution insurance is very difficult to obtain. In fact, it's prohibitively costly. So again, CRIF, working along with stakeholders, CARILEC and so on, we have developed that product, and we're actually in the process of engaging with the utility companies with a view to those particular entities purchasing the coverage.
And I would see the importance of that, because every hurricane season, electricity is lost because of fallen downpours, and don't ask for Wasco when
and you raised that because the other point that has to be recognized in the case of electricity, electricity is like a public good. Yeah. And when you consider the strategic importance of ensuring that your electricity supply is restored immediately after an event, you have to give priority to this. could you imagine not having electricity for a few weeks? You know,
I think water is my biggest concern.
Water, yes, and indeed, when Saint Lucia, when Saint Lucia received that payout for, I think it was Thomas, about $3.2 million US. Yeah. The records would show, and I think I was still there in a previous actually, quite a lot of the funding actually went towards restoring the water supply. You know, so that for us is also another very good example.
Yeah. Yeah. So Mary, let me bring you in. What sort of assistance is the World Bank providing in terms of a blend of grant or concessionary loan financing to governments to support the disaster risk financing strategies?
Thanks, Glenn. So the World Bank provides multiple instruments that are a mix of grant financing as well as blend financing or concessional financing. The first of which is the Catastrophe Deferred Drawdown Option, or CAT-DDO, which is a prearranged loan that can be dispersed upon an agreed trigger. For example, a country's declaration of a national emergency. And by definition, this can also include a health emergency. In the Caribbean, for example, the World Bank currently has CAT-DDOs in place in Grenada and Dominican Republic. Dominican Republic was able to draw down $150 million in response to its COVID-19 response efforts. We also have contingent emergency response components, or CERCs, which are a flexible financing arrangement that's added to most World Bank projects, meaning that if a crisis happens, the project can immediately reallocate resources to address that need. Saint Lucia, for example, has been able to access 2 contingent emergency response components in response to its COVID-19 needs through its health system strengthening projects, as well as the aforementioned disaster vulnerability reduction projects. We also support CRIF in helping CRIF to keep its premium costs low and build more innovative projects. And most importantly, in addition to grant and concessional financing, we also offer a wealth of technical assistance to the region. This particular technical assistance that helped develop the disaster risk financing strategy in Saint Lucia was financed by the European Union, who is a key partner in building financial protection strategies in the region. And so the mix of concessional loans available to countries in addition to technical assistance is the kind of support that the World Bank really provides in helping countries reduce their economic exposure.
And Saint Lucia is a beneficiary of most of those that you're currently mentioning. I know you said we benefited from 2 payouts already.
Yes, Saint Lucia has benefited from the contingent emergency response component of 2 World Bank projects totaling about $10.5 million US.
So Matthew, that goes a long way.
Yeah, very much so. Especially now our different sectors are impacted from COVID-19. So the assistance from the World Bank is quite timely and very welcome at this time.
So now that we're on this in terms of assistance, in terms of the disaster risk financing strategy and where we access funds, is there any other, are there any other, which I know CRIF is a major player, but what else is available to us apart from the World Bank?
Well, apart from the World Bank, the government also has contingent line of credits with local banks in Saint Lucia, as well as other arrangements with the Eastern Caribbean Central Bank and so on, so they can tap in those reserves as needs be and so on. So we're using a multi-facet approach, all angles where we can diversify our risk so that we can get access to financing whenever a disaster strikes the country.
Now, there was an interesting article that came out, a press release from CRIF, and let me just read. CRIF's new policy year commenced on June 1st, which coincides with the start of the hurricane season. How well did the renewal exercise go for countries? And explain the impact of the recently announced grant of EU 10 million or US 11 million in terms of savings, increased coverage for Caribbean governments. That sounds like a lovely amount.
Very much so.
Did it impact, how did it impact the countries?
Good. Okay, thanks for that question. The renewal the renewal process, I will admit, went much better than expected. I think when we started the discussion with member countries, it was with a certain amount of trepidation, because we know that they were all going and they're still feeling the impact of the global COVID pandemic. And we understood exactly the impact that it was having on the fiscal operations or the broader macroeconomic impact and so on. And we know it would have been a challenge for those countries to be able to come up with the required resources to meet a number of commitments, and of course, including even insurance. But I'm really pleased to say that the countries did very well. All our member countries renewed their policies, which is great. And secondly, the overall coverage actually increased by some 8%. And we were able, for the first time, to achieve a very important milestone. For the very first time, CRIF's the total cover provided by CRIF has now exceeded $1 billion. It's extraordinary for this to be happening in a COVID environment. And what this points to is the fact that, our governments have really come a long way. I think they really do understand the value in disaster risk financing, as has been articulated on this panel, to the point where they are now making sure that they prioritize the different instruments, especially the whole aspect of insurance, because we all know that CRIF has been a very successful entity. We've been able to make a lot of payouts, which I'm sure we could discuss a bit later. You mentioned the issue about the EU grant, and I will say that we were very, very appreciative of the support coming from the European Union. As you mentioned, the amount was 10 million euros or 11 million US dollars.
Yes.
And what this did is that it really translated to a discount. So members buying policies this year, including Mr. Brandford, for the government Saint Lucia, would have been able to reduce their premium cost by 26%. And this is significant because especially, as I said, in a time when countries would have been experiencing challenges just to get the required resources. So from that perspective, I will say that I really do, CRIF really does appreciate the contribution that the EU has made in just helping to ease the burden so that the countries can actually purchase the coverage for this year.
Yeah. And Glenn, it is so important that the EU intervene to ensure that the Caribbean countries who's already affected by the COVID-19 do not go in the hurricane season without having insurance protection. So it was very appreciative that we get those added help, because Saint Lucia's capacity is not the same as another neighboring Caribbean country's capacity and so on. So those discounts were quite significant, and it has reduced our premium on those policies very much. But having received the discount, we put the importance on having the coverage, because the cost of rehabilitation and recovery far outweighs what we pay in premium coverage. So it's very important that we see the cost benefit of having those insurance in place on a yearly basis to protect Saint Lucia.
So we use our discounts to increase our coverage?
Yeah, our coverage as well as we've actually taken advantage, because you heard about the coast. Coast was not in existence, not 2 years ago it became in existence. So this extra protection, which goes to the fisheries, persons in the fisheries sector, is another step in our disaster risk financing, which will reduce government's fiscal burden of having to provide not only for the entire population, but persons in the fisheries sector can have that form of protection as well. So once there is those products that are available, and you heard Mr. Anthony spoke about the electricity risk. So government will also look into getting coverage wherever that's necessary to protect us. So we're into the business of transferring the risk and managing it, mitigating our risk so effectively.
And that brings me, as you say this, to Tommy. Because Tommy, how important is water storage capacity, slope stabilization, proper drainage, food security in the disaster risk financing strategy, particularly for your ministry? Because as you said, we want to now move more data-driven. And what are we doing to help create greater resilience? Because I remember Tomas. After Tomas, everybody was looking for water in every ravine. I think everybody got to learn where the ravines were.
Yeah.
How important is it? Is there a focus on creating capacity for individuals as well as the main water utility company? There are many persons whose drains run into other persons' foundations. Yeah. What is the evidence showing? How are we able to mitigate before even a disaster strikes like another hurricane?
All right, Glenn, so the areas that you mentioned, water and slopes, and you also mentioned food security, these are critical areas for national development. I would start with water first. I think water is perhaps the most vulnerable. We just experienced a slight drought, a moderate drought.
But the thing is, once there's a hurricane, there's also a drought after the hurricane.
And then there is that. So you have water is particularly vulnerable. Yes. And so the ministry and the government of Saint Lucia has been prioritizing, and through a number of projects, rainwater harvesting technology at the private level in terms of households and businesses. I know in particular the hoteliers and the tourism sector recognizing that they are perhaps one of the biggest consumers of water, and they rely significantly on water, are now taking measures to build their resilience in terms of rainwater harvesting.
But while you're at it, I want to also ask you to mention whether there are any incentives for any of those areas as well that the government has that probably persons don't even know about. Like I know there's an initiative of water tanks, and you may get tax concessions or different softer loans through SLDB. Yeah. So you could probably mention.
So in terms of incentives, the government has not really. Well, at one point, we utilized tax incentives. Well, in terms of for the solar panels. But that has been discontinued since. The main incentives that we utilizing now is through credit to the private sector through the SLDB, as you would have mentioned. In particular, that's with the Disaster Vulnerability Reduction Project, where there is a CAF, which is a climate adaptation finance facility, which gives persons access to funding at a reasonable rate, but specifically to build resilience in terms of what you mentioned, slopes. So if you have your property and you realize that you will need to secure it in terms of stabilizing your slopes, these funds are available. Likewise, in terms of tanks, water tanks. I would also like to highlight that as part of that same project, there's a great effort to improve the water security at the public facilities in terms of your health facilities, your various facilities that will act as disaster shelters and so on. And as early as last 2 weeks, we've now tried to access over 300 water tanks that will be deployed across the island at various institutions, your public health, your schools, and these would normally be used for, like I indicated earlier, as shelters, and you would need water for hygiene purposes and so on, especially in the context of COVID. If God forbid we were hit with a disaster, a hurricane, and we're experiencing COVID simultaneously, you have to ask the question about social distancing, you have to ask the hygiene, and so on. So certainly these are critical areas. The area of food security is certainly a very, very important one for us, Glenn, and so we see it from the government of Saint Lucia, the Food Import Bill. And we ask the question, what if the supply chains were disrupted in Miami? And then all of a sudden we have a shortages here and the spikes in prices and so on. So certainly these are areas that are very, very important to us. And I think the Ministry of Agriculture, in response to the COVID, put together its COVID response in terms of food security. But I think going forward, there's need for greater focus on ensuring food security is a critical priority for us. So I hope that I answered your question. As you know,
I'm just thinking while you were speaking about Dominica, and we saw the first set of images, all the trees the leaves of the trees down, rocks, houses destroyed. Clearly, no farms could have withstood. Storage capacity, isn't that very important in terms of being able to store ahead, so that at least you have, what would be the reasonable 3 months, a month supply for your country or something like that? Do we have a plan that takes that into account, something like this?
Not to my knowledge that we have such.
And that's where the data then would be very important to make effective decisions.
But Glenn, I think the water WASCO is also making improvements to its water plants and so on, as well as desilting the main dam, so it can have a greater capacity because I mean the water has to be transported, and if there is not enough capacity in the dam, you already have a drought season and so on, then it means that even if you have tanks, your water supply would be short-lived and so on. So all of these are measures that are in place to ensure that at least we can have water resource management is going to be play an important part during and after a disaster.
But if I may ask, Glenn, so the government of Saint Lucia, through the Green Climate Fund, and the Department of Economic Development is the national designated authority for that. And the Green Climate Fund was developed by the Intergovernment Panel on Climate Change, and it's a pool of resources that's available to small island developing states and developing countries rather, to combat, at least adapt to the reality of climate change, and we see the onslaught of the impact of natural disasters on us. So Saint Lucia now has put a project which is focused largely on building resilience in the water sector. And that project is to the tune of close to $10 million US, and is really geared at building resilience of the water sector. The water sector is also very dependent on electricity in terms of the pumps and so on. So that project will also look at that in a sense to ensure that we make it energy efficient, integrate new technologies, and to expand and to build the overall resilience of the water sector. So I just thought that I should have mentioned that also.
Okay, so Mary, let me just bring you in. Are there any models that you could point to globally where countries can guard against pandemics? I mean, we're talking about COVID, but probably hurricanes. That there have been examples of countries who've done it successfully, having gone through a disaster like a hurricane and be able to be back in a very short space of time. Are there any examples, best practices around the world that the World Bank has been involved in?
Sure. There are a couple examples of risk transfer mechanisms that can help countries protect against pandemics. Risk transfer as opposed to risk retention, where a country is saving money and keeping the risk in their own budgets. Risk transfer is more about insurance and insuring those losses that might be very severe. The World Bank is involved in the Pandemic Emergency Financing Facility, or PEF. PEF has been a financing mechanism housed at the World Bank, designed to provide an additional source of rapid liquidity to help the world's poorest countries respond to cross-border large-scale outbreaks like COVID-19. The PEF design is unique in that payments can go directly to governments to benefit constituents directly, or to frontline entities who work on pandemics like WHO or UNICEF. And so once triggered through its insurance window, the payments will go directly to countries or these entities. The product itself is a pandemic bond. The trigger, I believe, is related to cumulative cases. But for more information on the PEF, you can definitely check out the World Bank's website. Another example globally is through African Risk Capacity. African Risk Capacity is a specialized agency of the African Union that provides various risk transfer products to address multiple perils in the African continent. In 2020, they'll be launching the Outbreaks and Epidemics parametric product as part of the African Union's response to outbreaks across the continent. It will cover 4 diseases that have been of epidemic potential in the continent, I think including Ebola, Marburg, Lassa fever, and meningitis, who have been known to cause economic disruptions in multiple countries. This product is a cat bond issued by the African Risk Capacity, and governments will also be the beneficiaries, and triggers again are reported cumulative cases of infection. Those are some examples of risk transfer products used around the world that could help countries further address COVID-19 response or similar pandemic response.
So can Saint Lucia benefit from those?
I believe Saint Lucia is eligible for payouts from the PEF. I'd have to double check. I know that there has been a COVID-19 response triggered, and now the steering committee of the PEF is determining how to distribute those payments. But essentially, every IDA member of the World Bank, meaning some of the world's poorest countries, including small island states, are eligible for these PEF payouts.
Okay. And Mr. Isaac, while Tommy was speaking, I was trying to figure out whether CRIF provides any level of technical support to the various countries in order to help mitigate risk. I know you're an insurance facility, but do you provide technical assistance in terms of that advice that helps countries prepare better? Would they, if they follow the advice and they do what's necessary, would that also impact their premiums?
Yeah, we do actually have a fairly elaborate technical assistance program, which is really designed to support the countries in helping to build capacity. And let me clarify that, again, CRIF is not a regular type of insurance company. In fact, we see ourselves more as being involved in developmental insurance. Similar to, you have, for example, development finance, we're in the development insurance space. And we've been providing, first of all, on the capacity side, we've been providing quite a lot of scholarships throughout the region, which you might have heard about. And there have been a lot of people who have benefited from our scholarships with the University of the West Indies and our postgraduate. And the whole idea is to develop a cadre of people within the region with the capacity in areas related to broad disaster risk management and disaster risk financing. So whether it involves meteorology, whether it involves engineering, disaster risk management, and things of that sort. So we've been investing very heavily in that area as well. We've also been providing funding for an internship program where we are targeting quite a lot of young graduates throughout the region, where we assign them at different areas throughout the region to help them get the required training and so on. So it could be in, for example, at CIMH, which you might be aware of. There is CDMA, and a number of other agencies within the, and it could actually be an agency in Saint Lucia. In addition to this, we've been providing small grants to individuals, and well, not so much individuals, but to NGOs and organizations to help them to build resilience and to invest in mitigation. It's available. People can actually go on our website and can apply for it. I think we can get a maximum of $20,000 US dollars that would potentially help the countries and so on. But there's another very important initiative that we have started, and that is it's called an integrated country risk management initiative, and we are working collaboratively with the Caribbean Development Bank in launching that initiative. And the whole idea is to help to improve the whole area of risk governance, because we talk a lot about risk, and risk is something that is pervasive. And in all fairness, I will admit that every ministry in the government deals with risk. But the reality is that we do not very often take an integrated approach to managing risk. And I'm really pleased to hear some of what Mr. Brandford indicated in terms of some of the things that the government of Saint Lucia has started doing. And when I heard, for example, the situation of the water sector, it's important for the government, from where it sits, to take a broad view of risk, those areas that are considered to be susceptible and needs attention. Governments cannot take the position, for example, that because electricity is privatized, that is not our business. Because guess what? If there is a major disaster and your electricity supply is interrupted, it becomes a big problem for the government, because you need to have your electricity supply up and running as quickly
productivity issue,
as possible.
Business continuity issue.
Exactly. The same thing with water, and all these other areas. So what we want to do is for governments to start taking an integrated approach to managing risk and having that view of risk, working collaboratively with a wide cross-section of agencies and stakeholders to identify the various risk factors and take the concrete steps to help mitigate them.
Matthew, how are the stakeholders involved, and what are sort of stakeholders we have involved in this disaster risk financing? Because, it's important to have a strategy, but do we have buy-in?
Yes, so the main stakeholders for this disaster risk financing, the lead role would be played by the Ministry of Finance, because as you're aware, the Ministry of Finance is responsible for the fiscal affairs of the country. And just as Mr. Anthony said that the government should take a critical role in risk management, is because that any interruption in economic activity affects the country's GDP position and so on. So imagine that the country is not able to function because no electricity or there is no running water. It slows down economic activity, and thus so it slows down government capacity to generate the amount of revenue that it had projected for the year. So with the disaster risk financing, the Department of Finance is the key stakeholder, will be playing a significant role in ensuring the plan is implemented and overseeing the plan and to monitor the plan during the period. Other agencies would perform roles like Office of the Prime Minister through the National Emergency Organization, NEMO, physical development and planning, building codes aspect, introducing and helping advance the building code until it becomes law and so on. We have the Department of Infrastructure, Ports and Energy, which always they are always there in the initial stage for the relief efforts, and then later down the line help with the rebuilding and reconstructing of the country back in its position. Department of Economic Development, which plays a critical role, DVRP, the CRIF and other agencies, and to coordinate with donors and seeking grant funds and so on. So these departments have very, very important role. Also the World Bank, which provides us with the technical and financial assistance, because you heard me the World Bank representative mention some of the actions they have taken with the government. You have other government agencies which plays a role as well, Sustainable Development, Climate Change Unit. All of those come together to form one, so that the country's disaster risk financing or disaster risk strategy can become more resilient. Because of climate change, we are now seeing the storms are intensifying. It's no longer, when it hit the country, it's no longer just picking up speed. It's already hitting at a category 2 or category 3 and so on. And so you have massive destructions in the way. Other stakeholders would involve the insurance industry, which is supposed to provide and be innovative in the market to provide risk transfer mechanism, not just only for the government and so on, and to provide the other form of insurance which they are best at, which is indemnity insurance, because CRIF would provide parametric insurance and so on, but the industry is more of an indemnity insurance and so on. So these measures are going to be very, very complementary to assist the government in its rebuilding effort. Also, you have the banking sector. All of these are part which to help provide easy access to financing for locals, for government, and line of credit will be there. And
I think we saw how important the banking sector was during CRIF when we had to stay locked down, but you needed money.
Yeah. And you have other NGOs, other groups, you know, non-profit organization. All of these are stakeholders in the process, in the education process, educating the public about risk, identifying risk, managing risk, measuring risk, and so on. So at the end of the day, we all are stakeholders, and once we play our key role, our country will become more resilient to disasters and so on.
So, Mary, we're coming to an end pretty quick, and I want to give you a chance to say the last word. Any sponsors, any persons you'd like to indicate that have assisted as well alongside the World Bank in terms of assisting Saint Lucia in developing the disaster risk management strategy, risk financing strategy?
Sure. Well, as I mentioned before, I'd particularly like to thank the European Union for helping us develop this technical assistance in collaboration with the government of Saint Lucia to develop their strategy, and for continued support in implementing the strategy. The UK's Department for International Development will be assisting the World Bank to provide future technical assistance.
Okay, thank you. And it's the Isaac Anthony. No, I'm tempted all the time to say Anthony Isaac. I don't know if anybody has done that before.
Always up.
But in terms of CRIF, what advice or what would you like to say in terms of, this is really like an introduction of what has been a long process in terms of disaster risk financing strategy for Saint Lucia. What would you like to say to the department in terms of their efforts so far?
Oh, I mean, I would just like to really commend, you know, the Department of Finance and the government of Saint Lucia for really taking the whole area of disaster risk financing, taking it very seriously. I mean, you know, we know how vulnerable our country is, Saint Lucia is, to the advent of natural disasters. And one of the key elements that we have to deal with is how do we finance the recovery and the reconstruction and the recovery. So from that perspective, it is really important that that the country continue to put a lot of emphasis on this. So what I would like to do really is to encourage the good work, and that of course CRIF continues to look forward to working with the government of Saint Lucia and the other governments in the region in terms of helping to promote disaster risk financing.
And Tommy, I'm going to put you on the spot. What do you have to say to our public in terms of their personal responsibility as well, in terms of being part of the disaster risk financing strategy? Because, you know, government is all of us.
Sure. Before I even I'll speak to that, you would know that we would launch our medium-term development strategy in February of this year. And a critical part of this is, yes, you are planning to invest significant amount of resources in terms of your public infrastructure and so on, but the risk of disasters is a specter that is looming over us. And I'm very happy that we have this strategy that complements this medium-term development strategy, and it gives me a sense of comfort that our efforts will not be to naught in the eventuality of a category 3 or 4. To the question with regards to the public, I think, like Mr. Brandford have indicated, that risk is everyone's business, and so the issue around the behavioral change in terms of persons doing the very small things, not necessarily the huge things, but to ensure that they take on their responsibility of mitigating risk at the household level and at the broader community and national level. Because what we've seen is that in the space of 2-3 hours, the development gains we have made over 2 or 3 decades can be wiped out very, very quickly. And that has drastic implications for the quality of life going forward. And so everybody needs to play their role. And I'm hoping that the Ministry of Finance will continue with its PR, and Glenn, I'm hoping that you could help in that, to continue to educate the public on the strategy and how, especially some of the products that CRIF has on the social protection side of things. So, but once again, I'm very happy from the Department of Economic Development to know that this strategy has come to complement our medium-term development strategy. Thank you very much.
Yes. And so this is where we'll end.
Okay.
We've been discussing the disaster risk financing strategy for Saint Lucia. Remember, We have, as of June 1st, entered the Atlantic hurricane season. The government has increased its catastrophic risk insurance coverage for Saint Lucia on the CRIF. You too have a duty to ensure that your property and belongings are insured during the hurricane season, thereby minimizing your exposure. As the slogan goes, be prepared. Thank you to the panel. Thank you for joining us virtually, Mary. We much appreciated it. And thank you out there for being part of our program. We will come to you again with further communication as we unfold the communication strategy and reach the public with various means, various fora on discussing risk and how Saint Lucia can get better prepared. Thank you very much.
Thank you.